Bitcoin trend analysis. February 18th, 2026, Wednesday. The war for February's trend has descended into a brutal, chaotic stalemate. After a period of spectacular crashes and stunning reversals, the market is now trapped in a vicious, high-stakes battle for liquidity. This is not a market for trend followers. It is a minefield for the unprepared. Looking back, the past month has been a bloody landscape of failed trends, perfectly captured by the predictive indicator below the price. Its history is a graveyard of false hope, painting a series of violent V-shaped reversals. Hopeful blue ascents, marked by long signals, have been systematically and repeatedly crushed by sharp yellow descents and quick close signals. The most recent long signal has suffered the same fate, with its blue line failing and rolling over into yellow after being stopped out, confirming profound underlying weakness and the bear's grip on the market structure. Today, Wednesday, February 18th, the session is defined by this extreme and violent chop. The price action is a chaotic whipsaw, with no clear direction. It is pinned to the white moving average, which is not acting as a guide, but as a central trench line in this bloody war, a battleground being crossed repeatedly with force. The liquidation heat map provides a chillingly clear picture of this war. The price is not trending. It is trapped inside a massive, bright yellow band of liquidity that is formed between 67,283 and 68,157. This is a high-volume node, the absolute fortress where the war for the monthly trend is being fought. Both buyers and sellers are fiercely defending this territory. The price is being manipulated to hunt liquidity both above and below this zone, creating violent, untradeable swings. The volume speaks with the force of a series of explosions. The chart is littered with massive purple spikes of volume on every major swing, both up and down, confirming that these are high-conviction, institutional-level battles for control. The best trading strategy in this environment is one of extreme caution and patience. Attempting to trade a trend in the middle of this liquidity fortress is financial suicide. The highest probability play is to wait for a confirmed, high-volume breakout that finally escapes this brutal range. The probability of a sustained trend emerging from this exact spot is low. The probability of another violent, liquidity-hunting move is exceptionally high, conditioned for continuation. For a new bull trend to be confirmed, the bulls must do more than just rally. They must win the war. This requires a decisive, high-volume breakout that shatters the top of the liquidity fortress at 68,157 and holds it as new support. Only then would the path be clear to hunt the next cluster of short liquidations near 70,000. Conditioned for reversal. This remains a path of higher probability, given the multiple failed rallies. If this latest bounce fails and the price breaks down below the floor of the liquidity fortress at 67,283 on a surge of selling volume, it would signal the bulls have finally been exhausted. This would almost certainly trigger a swift and violent cascade down to hunt the long liquidation clusters below, starting with the 66,400 level. If you're enjoying this video and want to see more just like it, make sure to hit that subscribe button. It's totally free and helps us keep creating awesome content for you. Don't forget to like the video so we know you're loving it, and drop a comment to let us know your thoughts. We read every single one. And if you think someone else would enjoy this too, hit that share button and spread the love. Let's grow this community together. Thanks for watching. You're the reason we do what we do.